Hello and welcome to this weekly market recap for the week ending Wednesday, October 1st, 2025. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and it's a pleasure to be with all of you again this week. Quite a week it's been. We finally got rid of September, thank goodness, although this September wasn't bad. I kind of like the September 2025 version of September. Normally, September is the worst month of the year. Historically, that's been the case. It's the only month where we have seen the market go down, the S&P 500 go down during the month more than it goes up. But that was not the case in 2025. We finished up for the month of September. And I think the bulls can celebrate and rejoice because we were already overbought going into the month. There were still a lot of questions as far as the Fed, what the Fed was going to do. Jobs, we've had a lot of issue with jobs. You don't know about inflation. And of course, going in to the month of September, we just know historically that's not a great month. So we weathered it all. We weathered it all. We got through the month. And now we're moving into the most bullish time of the year, the fourth quarter, which is much more bullish than the other three quarters. And the most bullish time of the year starts during the month of October. It actually begins at the close on October 27th. So later this month, that will begin the most bullish period. That runs through January 18th. So just want to mark your calendar. That has been historically since 1950 the best time to be invested in U.S. stocks. But anyway, let's go ahead and take a look at what's happened over the course of the last week. We do have a big jobs report coming up on Friday that I'll mention. We got the ADP employment report out today, and jobs were negative on this particular report. And last month, August, ADP employment was revised negative. So that gives us 2 consecutive months of negative jobs on the ADP employment. And then, of course, Friday we'll get non-farm payrolls, where we've seen since May jobs coming in below 100,000, but not yet in negative territory. So that's something that we'll be thinking about and looking at and waiting for with bated breath as we head toward Friday. One way to look at this, though, is that bad employment numbers almost guarantee us rate cuts as we go forward into November and December, and probably more rate cuts in 2026 if this jobs data is weak. Anyway, let's take a look at what happened over the course of the last week. NASDAQ 100 gaining 1.2%, S&P 500 up 1.1%. Everything was up slightly except, once again, transportation stocks lagging the overall market. But as we went through the last week of September into October, the first trading day of October, we did have another positive week for stocks, and that was awesome. There was a change, though, in terms of leadership. You can see the second sector there, technology, continued to strengthen, gaining more than 2% last week, outperforming the overall S&P 500. That's always a good thing. But the other 3 leaders were defensive groups. And the one that really took off this past week was healthcare. The XLV gaining more than 5%, most of that coming just in the last 2 days. And I do want to mention, when I talk about 1-week returns, I'm talking about from the close last Wednesday to the close this Wednesday. I always want to make sure everyone understands that. Many times we're talking about weekly performance. We're talking about calendar weeks, Monday through Friday. That's not what I'm referring to here. This is looking back from last Wednesday's close to the current close today. But healthcare, very, very strong. So S&P 500 breaking out to a new high. First close ever above 6,700. Closed at 6,711.2 today on the S&P 500. Not too far now from my target that I set at the beginning of the year. I said the S&P 500 I thought would go to 7,000, even though I did expect that we would have a correction during the first part of the year. We had not only a correction, but we saw, that very quick cyclical bear market where we did drop 20%. But as soon as that was over, you can see down that April weakness, we rallied back, went back to new all-time highs, and now we are speeding toward that 7,000 level. I think we're going to see that before the end of the year. Moving on to the NASDAQ 100. Once again, another record. I believe we did set the record at the close. Let me just see. Last closing high, September 22nd was 24,761. And today we closed at 24,800. So we did close at another record high on the NASDAQ 100. That is always good to see as well. Lagging a little bit on the small caps. We had a pretty good day after some early weakness. We did rally again on the IWM, closing near the high of the day, jumping up about 0.2% today. Still got a little bit of work to do. Need another probably 1.5% to 2% higher to the upside to break to yet another high. The good news, though, is that we did break out above the all-time highs that was set previously back in November of 2024. And after breaking above, moving up to 247, notice we came back down. We've held that rising 20-day moving average and continue to trade above it. So I think that is a positive for the IWM. Taking a closer look at the XLV, I wanted just to point out this is a 5-year weekly chart on the XLV. And I'm going to annotate this because I want to show you the downtrend that this group had been in. So if we take a look at the lows right along here, something like that, and then we drag this up, you'll see that that was kind of a channel that we had been in for probably about the last year, maybe 13 months or so. We broke out of that with the strength that we've seen over the course of this past week. Notice also that weekly PPO turning positive and the weekly RSI moving above 60 for the first time. So we're showing more and more signs of strength in the XLV that I think is going to continue. May not go at the pace that we've seen here over the past couple of days, but this has been a very, very strong move to the upside, breaking out of that longer term down channel, which I think bodes well for healthcare as we go into the end of the year. Moving on, I wanted to show you a further breakdown of the healthcare. So here are the 5 industry groups that make up healthcare. And again, healthcare was up 5%. Look at the 2 groups that primarily were responsible. Pharmaceuticals jumped over 9%, 9.3% to be exact. And biotechs jumped 8%. This was a group going into the third quarter that I really liked. I had mentioned this back for the Q3 update that I did for our Earnings Beats members back at the end of June. I thought biotech was ready to move to the upside. We have seen that. Last week's move was just fantastic. Again, 8% in a week, making a big breakout. So those are 2 groups that not only are moving up, but also I think look really strong to continue moving to the upside. So here is your pharmaceutical group. And if you look back over the last 6 months or so, the highest that we had been was 900. We closed on Wednesday at over 920. So a really solid break there in terms of the pharmaceutical group. So love to see that. The more groups that are performing well, the merrier for the bull market that we're in. Now, if at some point we start to see for an extended period of time these defensive groups leading the market, that would be a problem. But these are groups that have been beaten down for a while. We want them to rally. We want them to start looking better on their own absolute charts. And that's what we're seeing out of the pharmas. Biotechs, check this out. This has now moved to about an 11-month high. So we're getting close to a 52-week high now on the biotechs after moving up, over the last 4 days, probably about 10%, a little bit more than 10%. Much of that, again, coming here just over these last 2 days, Tuesday, Wednesday, really big days, making big breakouts and continuing to make that push to the upside. All right, wanted to just let you know, if you go over to earningsbeats.com, that's our home. A couple things. Number one, we have a free 30-day trial. If you want to try our paid service, you can click on that green button right there, get it started. Next 30 days are going to be big. We're into the fourth quarter, which tends to be a very bullish period. This will be a great time to check our service out because I think we're going to have a big month in October, and I think we're going to have a big quarter ahead. But if you want to just, maybe you're new to Earnings Beats, want to kind of take it slow, kind of learn a little bit more about what we do, scroll down. We have a free newsletter. This is not, there's no credit card required. This is completely free. Literally, we've had tens of thousands of folks join us on our Earnings Beats Digest. All it takes is a name, email address, hit that subscribe button. And when I say a newsletter, it's a chart in 2 paragraphs, and it comes out twice a week. So it's very easy read, talking about maybe 3-4 minutes it's going to take you on Monday morning and Wednesday morning. It'll give you potential trading ideas. And then if you are on your mobile device, there's a QR code. You can scan that QR code. That'll take you to a landing page where you can sign up on your mobile phone. Last thing I want to talk about. So we just mentioned the strength that we saw in the healthcare area. I want you to take a look at 10 stocks that have absolutely changed their chart of late. They've gone from either downtrending to uptrending, or maybe they've gone from sideways consolidating to breaking out. But these are charts, and these are companies that I think could have a lot more upside ahead. And many of them are in the areas that we've talked about today. Now, the way I use the Stockcharts platform, and the way, maybe you all could be thinking about things, is that when you see an area of the market like healthcare take off, let me show you one of the tools that you have at Stockcharts. So I'm under member tools, and I'm going to go down, and under the research tools right here, you see Scooter Reports. Scooter Reports, SCTR, it's an acronym, and it stands for Stockcharts Technical Rank. This is a formula that was derived by John Murphy, who is one of the few folks that I use to learn more about technical analysis. I'm mostly self-taught, but I found his financial analysis books to be absolutely critical to my learning, mostly because of his intermarket relationship work that he did that really inspired a lot of the work that I do today, and a lot of the calls that I make on tops and bottoms really stems back from the inspiration I got from John. But John was the one that was responsible for creating the Scooter score, and it's a formula. And there are limitations. I'll tell you, the main limitation is that it only goes back 5 months. So it could be a stock, a stock could have a really strong relative strength value assigned to it. The Scooter score could be really high, but it could be a stock that's been going down for 10 years and it's just gotten hot in the last 5 months. So you got to be a little careful there. But otherwise, I think it's a great way to look at relative strength. And so here with the Scooter Reports, you can look at large cap, mid cap, small cap stocks. I'm going to look at large cap first. Over here, you can see it's in Scooter order. So that's the default. Scooter scores run anywhere from 0.1 to 99.9. So here are the stocks that are doing the best based on the formula that John created. And if we flip it, here are the stocks that are doing the worst. These are the stocks probably that you want to be avoiding for now until they start to show strength. Now, another thing you can do here is I can go back and I can look at 1 week. Now, it's still, Scooter score is just a static number as of today, so nothing really changes here. But Scooter scores can change from week to week. So what I like to do is pull up this time frame of 1 week and then hit this change button. And this will tell you many of the stocks that have gone through significant changes. And when you look at an area like healthcare that's been beaten down for so long, these stocks within this space that are showing all of this change, positive change in Scooter, this is kind of maybe a starting point for you to find some of these stocks that are starting to show relative strength. Look at the top eight large caps over the last week that have had the biggest change in their Scooter scores. All 8 of them are healthcare stocks. I mean, if you keep going down the list, you'll see more healthcare. 12 of the top 13 are healthcare. So if I go to mid cap, look at the healthcare, again, lining most, the biggest moves. How about small cap? Not as much, but you still have healthcare here. You got a couple more healthcare here. Anyway, this is a great way to look at the movers, the scooter movers, to give you an idea. And look how quick I did this. Stockcharts does it all for you. So you really, if you haven't become a member at Stockcharts, you really should become one and use the vast number of tools that they have there. I find this when I go through these next 10 stocks with you, 10 stocks that I feel like are really starting to soar to the upside. This is where I got it from. And I literally did this 10 minutes before we started the show. I mean, I had an idea. I've already seen some of the stocks move today, but they were on the scooter reports, or at least most of them. So let's take a look at these stocks, 10 stocks that I want to just show you that are really starting to move. The first one is Icon PLC. This is ICLR. This is in the healthcare providers area. You can see its relative strength was going down, but look at this jump in relative strength the last 2 days on volume, making this breakout. We were already in an uptrend. We held this channel line or trend line, and we broke out above a triple top here with the move on Wednesday. I think we're going to go up and challenge that recent high at 210, maybe go much higher than that. IQV, again, healthcare provider group. They actually made the breakout above the high close from a couple months ago. And I think this is just starting potentially a big run. AD line just now getting to a new high. Biogen. Now we're going to move on to the Biotechs. Couple biotech names for you. Biogen made a big move, breaking back up. It's been in this nice uptrend off of the April low, made a new breakout today. This one, I want to see that AD line starting to move. We saw it today. I want to see this continue to the upside. If that fails, if we go back to a new low on the AD, I would probably be a little bit more cautious with this one. But for now, I think this could be the start of a move. ABBV, no problems at all with the AD line, already at new highs. This one, after breaking out above these tops right here, had been consolidating. Last 2 days, another big breakout. I see this one, it's stretched. Maybe we pull back in the short term, but I don't think this run is over. Pfizer. Pfizer's one that has been downtrending for a very, very long time. But look at this. Left side of this is the left shoulder, back up to a neckline, down to a head, back up to the right side of a neckline. Here is the right shoulder. And with massive volume, we break out of this bottoming head and shoulder pattern. This measures from 26 down to about 20, so up to $32. And if you look at the chart, I mean, that could just be getting things going. But if we get up to 32, we're going to probably move up to about a 2.5, well, maybe not quite 2.5, maybe a 2.25 year high on Pfizer. But I really like this move up with that heavy volume coming in. Next up is J&J, Johnson & Johnson. This one, after recent consolidation off of an uptrend, that's a bull flag. We've broken out of it. I see this one measuring much, much higher. I would not be surprised to see a move up between 200 to 210 on Johnson & Johnson. And for a stock that, is more defensive, doesn't move as quickly, I think that would be a huge move. One more in the pharma space, AGIO, a little bit smaller company. Look at the AD line setting a 52-week high while we keep challenging this breakout area. I think this stock, if it closes above $41, I think this could run up maybe up to the 60, 62 area. I wouldn't be surprised to see it back up near that 52-week high. It's got a lot of upside potential here. I just wanted to mention that one. Now, outside of healthcare, I'm going to give you 3 more stocks, one being Tesla. Tesla definitely broke out of this triangle. You can see we had strengthened back earlier in the year, and then we had a triangle in play. We had declining highs, rising lows. It was a symmetrical triangle that was squeezing. We broke out of it with volume. I think this move goes up to challenge the all-time high closer to 500, and I think ultimately we're getting a breakout on Tesla. Olin, O-L-N, Olin Corp. This one started to make a move back in August and the first half of September, pulled back to the double top breakout, and now is just starting to move back up again. I think the volume trends have turned more positive. AD on the most recent high. The AD line you can see was at about a 10-month high. I think we're turning back up on that AD line. I'm looking for a breakout on Olin. And then the last one I have for you is more of a smaller cap stock, CleanSpark. This is one that in the past has had big runs. I think we're starting another one. Big run up. We took out the recent highs at about 13 to 13 and a half, made that breakout on very, very big volume. You can see that AD line again, just recently putting in about a 9-month high. I think this stock looks like it's poised to go higher. I think the first step is probably up to that $17.50 to $18 range. And that's all I got for today. Really appreciate you tuning in. We'll see you again next week. Remember, non-farm payrolls out on Friday. If that comes in, with another weak number, I don't know if I necessarily want to see red, just a low number, a low positive number, I think would be awesome. I think that would start to reinforce the idea of rate cuts. And I think that's going to continue to help lift the market into year end. So have a great rest of your day, everybody. Happy trading, and I'll see you next week.